Hello traders, welcome to the Nexoel Trading Hub YouTube channel. So lately we've been seeing a wild price delivery in the markets. So we're going to be looking at this forecast. If you've watched the weekly Forex forecast video, then you'll be able to have better understanding to the perspective I'm going to point out here. So we're going to look at the delivery of price thus far and still yet project what we'll be expecting from Tuesday through Wednesday, Thursday, and Friday. So the possibility of looking at what I may be expecting to see. So I'll be pointing out my own perspective to you guys. So what we can see is we have the fall of price to the downside here, price return into the monthly fair value gap, the drawn liquidity to the downside, mitigating the monthly bullish order block. So when we saw this bearish impulse and price created this liquidity gap, this is Friday's candle, last week Friday's candle. I told us to expect what bullish movements to the upside, and we'll be looking at how price fills up this liquidity gap we have in the markets. I'm really sorry that the dogs are barking. So what we can see, we have the liquidity gap here, and clearly what you can see is that volume here has not really fully traded into the liquidity gap. During the weekly Forex forecast, I pointed out the fact that if we see price trade more higher, then we'll be looking to this what up close candle before the bearish movement to the downside that took out this low point as the reference point, the next reference point, where we'll be looking at seeing the possibility of price giving us a clear sell model. Until price gives us a clear sell model, we'll not be considering going bearish in the dollar index, because I also pointed out to the monthly inversion fair value gap, where if price may further continue bullish, then price may trade into the monthly inversion fair value gap. But since what we are seeing structurally, we are bearish to the downside, and this is the last lower high point that price created before sponsoring this bearish movement that took out these low points. So, and we can see price left the liquidity gap, and this is the sponsored movement, the last bullish movement before we had this bearishness that took out this low. Price created the liquidity gap. So, reason why I told us to see bullishness into this liquidity gap. Want to see volume fills that up, and then we look to the possibility of a clear sell model basically in the lower time frame, the 1 hour, or you can go as far low as the 15 minutes. So this is the daily time frame. So let's check the 4 hour time frame. So here in the 4 hour time frame, what we can clearly see is that price gave us that bullish movement. So we can see that we are having volume yet to fill up this liquidity gap. So what we can see now, price traded to the upside, return, and then we have for the bullish movement to the upside. So we can see in the daily time frame here, we have this institutional order flow, the pullback movements, the buy movements before the sell impulse to the downside that took out the swing low points. So what we can see, last week I pointed out how price reacted at this bearish order block. I told us to expect that possibility. So price reacted there and the bearish movement to the downside. So this is the last up close candle price zone that we identify from the daily time frame. So here in the 4 hour time frame, we can see we have this pullback movement. So we have the institutional order flow established in confluence to this liquidity gap zone. So I'm still expecting to see bullishness to the upside for price to completely fill up this liquidity gap. And I want to see the reaction of price at the institutional order flow zone. So I want to see if price gives us a clear sell model, then we want to consider going bearish in the dollar index. Except otherwise, price continues bullish to the upside into the monthly inversion fair value gap. So I am pointing out my perspective to us. The market has really been wild lately. So let's check the 1 hour time frame. So here in the 1 hour time frame, what we can see, we have what? This minor market trend, this minor bullish movement to the upside. And you can clearly see price return reacted at this bullish order block, and we can see price traded to the upside, broke this high point, price returned again and reacted at the last down close candle before this bullish movement that broke this high. We can see price return to that sponsored bullish movement again, and then we can see that price again returned to the last down close candle that sponsored this bullish movement that broke this high. And now what we can see is here we have the last down close candle to the downside here that sponsored this bullish movement that took out this high points. So you can see in the 1 hour time frame, we're having the market giving us what's bullish, what's order flow. Price gave this bullish movement, return mitigated the bullish order block, bullish movement, return mitigated this bullish order block, movement again to the upside, return mitigated the bullish order block. Now we have, this is the most recent higher low point that sponsored this bullish what movements. So we can clearly see that we're having a bullish movement into the what liquidity gap we have established clearly from the daily, the 4 hour. Now we can see that also in the 1 hour time frame. So I'm looking forward to see how price then gives us a clear sell model. So basically now you can see that this is the structural perspective, the minor trend. We have impulse retracement, impulse retracement, this impulse retracement, this impulse. So we want to see how price returns here. If price gives us a buy model, then we want to further push price to the upside. This should be your targets for a take profit if you are long in this minor trend. So want to see how price trade again to the upside here. And if we have a return of price and price violates the most recent created higher low points and then gives us a sell model, then we want to now go what? Bearish in the dollar index. So I am pointing out my perspective to you guys. Except this doesn't happen in the market, where price then creates a most recent higher low point and we possibly have price return and respect that and continue bullish, then we may be seeing what price going further bullish into the monthly inversion fair value gap zone. But if price then fills up this liquidity gap, reacting at the institutional order flow and gives us a clear sell model, then we want to have what? Bearish continuation to the downside. But what we can see is we have what? This minor bullish trend to the upside. Let's reduce the thickness of this so that you can clearly see that. So you can see we have what? The minor bullish what? Trend to the upside. So this is the most recent higher low point, and this took out what? This low sell side liquidity. So if price trades to the downside here, we want to see if price gives us a buy model in the 5 minute time frame, then we want to take a bullish movement to the upside. Though I don't trade the dollar index, I basically use the dollar index to establish more trading decisions to trade the main pairs, that is the major pairs. So what we can see, we have this movement to the upside. So if price return to the most recent higher low point, and in the 5 minute time frame, the 2 minute time frame, you see a buy reason, then you know you have what? Bullishness to the upside. If this gives us a valid break of the most recent anticipated low point we are waiting to see price create, if price breaks that and it gives us a very clear sell model, then that is established that we want to see what? Bearish continuation in the dollar index, guys. So this is what I have to show us in the dollar index, except this doesn't occur in the market, then we continue what? Bullish to the upside. We want to see price respecting the bullish what? Order flow. The price takes out this high point in extension, this high point possibly. So this is what I have to show us, guys, in the dollar index. Let's check the Euro USD pair. This is Euro USD and this is the daily time frame. So in Euro USD, we identify this weekly bullish fair value gap, and within that we have this weekly inversion fair value gap. Pointed out the fact that price have reacted to the first weekly inversion fair value gap we were looking at, and we saw the bullish movement to the upside where price mitigated the monthly bearish order block, fully what? Mitigating what? The weekly bearish fair value gap, and we can see this bearish reaction. So in the weekly Forex forecast, I pointed out this sell movement before the bullish movement that's got this high, where we want to see how price trades to the downside. And if price gives us a clear buy model here, then we want to buy to the upside. But now we can see that we are having that bearish movement to the downside. So price has the possibility to violate this and go bearish into this zone here. Since we have this level here, this price zone here we can see we have this open close price, which serve as key levels also in the market. So I told us want to see the movement of price to the downside. If price gives us a clear buy model here, then we want to look to buy the euro. But we have to be trading with an open mind and then interpret the narrative in the markets. Let's check the 4 hour time frame. So here in the 4 hour time frame, you can see that level we mapped out from the daily time frame, the key level, the open close price level, which also we can see we had that sell movement before the bullish movement. Here in the 4 hour, we can see we have this unmitigated candle wick, And here we have that last sell movement based on this internal structure. We have this last bearish movement before this bullishness based on the internal structure here. But this is the origin of this bearish movement to the downside. So we can see we have this unmitigated weak. I pointed out this 4-hour inversion fair value gap that we could see bullish reaction from there. So we can see price traded and gave us that bullish reaction. Now we can see price again trading back to the downside. So clearly we still have Euro USD not yet violating our zones yet. So we have this price level, we have the inversion fair value gap. So price have not really yet violated that zone. So we'll be looking to those zones. If price gives us a clear buy model, then we should look forward to buy, except price decides to continue what bearish to the downside. So I am giving you my perspective based on the most recent narrative. You can use other indicator tools you have to want to check these things. You get, I'm not going to go into details trying to show you guys commitment of traders data and all those things. I just want to give you guys a technical perspective to this. Let's check the 1 hour time frame. So here in the 1 hour time frame, so you can see clearly the level marked from the daily and the 4 hour, we identify an unmitigated weak. Here you can see we have this bullish fair value gap here. So you can see in confluence here is our 4 hour inversion fair value gap. Price traded to the downside and we had bullishness to the upside. So I actually got an entry to this bullish movement, though my target was to see price trade to this level here. But anyway, price didn't trade to this level. We had that bearish reversal to the downside. So what we can see is clearly why my own target area was here. It was from the 30 minutes. Let's check the 30 minutes. So we can see that is where we had the bearish order block. So that was why my target was here. You can see that displayed in the screen. So that was how my target was here, but price did not really return into this before it reversed to the downside. So let's get back to the 1 hour time frame. You can see that level where I called out the high here. So what we can see is we have price here respecting what the bearish order block, just the way we can see in the dollar index, price respecting what bullish order block. So price came here, traded to the downside, took out this. These are internal structure. So this is what's our internal bearish structure, a minor trend. So we can see price took out this low return, mitigated this last up close candle before the bearish movement. Price again traded to the downside. You can see a price return mitigated what the bearish order block. And now we are having this bearish movement to the downside. We still have our inversion fair value gap zone, not yet violated. And we have this level here, the open close price from the daily time frame, which we can see we identify an unmitigated weak in the 4 hour time frame. Let's check the 2 hour time frame. We could see what a bullish order block. Awesome. So you can see there we have what a bullish order block. So we still have the zone not yet violated to give us a strong reason for a bearish momentum to the downside. So we'll be looking at the zone to see if price gives us buy model, then we buy the euro. But if price violates it, then we know we are bearish. But some people are already saying that the euro is really going to fall. Well, I don't really want to say that, and I don't really want to point that out from other trading parameters. I just want us to dwell with the charts, just look at it from the structure in the chart. That is all. So this is what I have to show you guys in the euro USD pair. So let's check out the yen basket. So this is the yen. And what we can see in yen is, let's check that from the weekly time frame. So what we have in the yen basket is, here we have this inversion fair value gap. So we can see how price returned into that. And we have what this bullishness to the upside. Now we can see price is taking out this buy side liquidity here, but we still have this buy side as a drawn liquidity. So what we can see clearly is price took out this. This is still the weekly candle. The weekly candle delivery is not yet fully established. So let's check the daily time frame. So here in the daily time frame, since we identified that price reacted at the weekly inversion and gave this bullish impulse to the upside, what we can see is that yen is giving us this bullish trend to the upside. Basically, the drawn liquidity, this and also this. So what we have is price has not yet fully taken out this high point with volume closing above it. What we have is that volume here close above the body of the swing high points here. Now we have this bearish movement, this internal structural perspective to the downside. And we can see this is the bearish order block that sponsored this bearish movement. Price return mitigated that fell, but we can see price traded and violates that. So we can see that it reclaimed price to the downside, and then we could see bullish continuation. So this is Monday candle. We can see bullishness to the upside, but then volume is still trading back to the downside. So I would look forward to see if price trades further to the downside. And we can see in confluence we have this bullish fair value gap here in the daily time frame. Here we have this bullish order block, price return to retest it. Bullishness, we have this bullish fair value gap. So if price dips more lower, then in confluence to this bearish order block that we can see price traded through it, we have the bullish fair value gap in the daily time frame. So if price continue for the bearish, then I'll be looking forward to see how price reacts here. If price was going to give us buy model in lower time frame, the 1 hour, the 15 minutes, then we can consider going what's bullish to the upside. Let's check the 4 hour time frame. So here in the 4 hour time frame, what we can just see we have this rally, we have this base and this rally. Price has taken out this sell side liquidity. So based on the structure from the 4 hour, you can see in the 4 hour we are what in an uptrend. Price has taken out this high points here. So we could see price return to retest this, and we may continue bullish to the upside, except price decide to dip more lower into this fair value gap here, considering this as a trend line liquidity. Let's check that in the 1 hour time frame. Then yeah, in the 1 hour time frame, we can see that as trend line liquidity. So if price decides to trade more lower, to possibly seek all of this liquidity before giving us a buy model. So that is what I'll be looking at. So I'm looking at the possibility of what bullishness in the yen basket so that we can continue bullish. So with establishing this, you would know then what you're going to expect in the yen pairs, the GBP, JPY, USD, JPY. But truly, GBP has been heavily bearish lately from last week and even the delivery today, Monday. So the market is just somehow unpredictable, but yet we just have to look at the markets with our trading system, with our trading concepts, and look at possibilities we can leverage and trade. So this is what I have to show us also in the yen basket. This is GBPUSD. I didn't really expect this massive bearishness. But anyway, from last week, let's check the weekly time frame. We can see we had a massive bearishness to the downside in GBPUSD. We can see price traded to the outside, but we can see how volume returned back to the downside. And now price have fully returned to mitigate this weekly bullish fair value gap and even the inversion, violating the inversion fair value gap. Let's get back to the daily time frame. So here in the daily time frame, what we can see is how price have returned to the downside, mitigating the weekly bullish fair value gap. Here in the daily, we can also see daily bullish fair value gap fully mitigated. Here we have this last sell movement before the buy movement. So basically, price is mitigating this institutional order flow, and we can see this took out sell side liquidity. So we may see price gives us bullish reason from this zone. So if I'm going bullish, then from this zone, I want to go bullish and then target this as my profit target. And if price decides to want to continue further bullish to the upside, then I'll be looking at this breakout block. I'm looking at this breakout block level here, because what we have is that is the last sell candle that really sponsored this bullish movement that took out this high points here. And now we have this bearish displacement to the downside. So if I'm going bullish, then if price gives us a clear bullish model in the 1 hour or 15 minutes, then I'll be trading. First target will be this inversion fair value gap that was violated. And if price gets more bullish then to this level, before considering the possibility of this bearish fair value gap, guys. So this is what I'll be looking at in the GBP USD, but this is really heavily giving us this bearish impulse. But since we have price now returning to this institutional order low, then we could see the possibility of buy model then. Let's check the 4 hour time frame. So here in the 4 hour time frame, you can see here we have the sell movement. Price took out sell side liquidity here before giving us this bullish impulse to the upside. So should in case possibly price trade more bearish, then in the 4 hour time frame here we have this bullish fair value gap here. as a zone we could look at for the possible buy model if price wants to trade bullish. If price gives us a clear buy model, and I want to trade bullish, first I'll be looking at this inversion fair value gap that was violated, and if price continue bullish to the breakout block zone we identified from the daily, which in the 4 hour we can see here we have that last down close candle that sponsored this bullish movement that took out this high points. So this is what I have to show us in GBPUSD. So this is GBPUSD. We have a strong bearishness to the downside. So what we can see is price has given us a single candle order block here. So we may see the possibility of a bullish movement. This is my first target for a buy, take profits, then the breaker level here before considering the possibility of higher prices to this level. So this is what I have to show us in GBP USD. Cheers guys, and God bless you all.